Tax brackets for 2025. How to use them to save dollars. A lot of people think that if they move into a higher tax bracket, all their income suddenly gets taxed more. That is simply not true. Hi, I'm Dave Horwedel, CEO of Torchlight Tax. In this video, I explain how federal income tax brackets really work, and then show you the actual 2025 brackets in a simple chart you can see all at once. Then at the end, we will briefly touch on tax-saving strategies and make the chart available to you to download. First, the United States uses a progressive tax system. That means we do not pay one flat rate on every dollar. Instead, our income is taxed in layers. Each layer has its own rate. You start with your taxable income. That is your income after deductions, not your total gross income. Then the IRS takes that taxable income and runs it through a set of brackets. The first slice of your income is taxed at the lowest rate. The next slice is taxed at the next rate, and so on as your income goes up. Only the dollars in a given bracket are taxed at that bracket's rate. This gives us two important ideas. One is your marginal tax rate. That is the rate on your last dollar of taxable income. The other is your effective tax rate. That is your total tax divided by your total income. Your effective rate is almost always lower than your top bracket because your income went through several lower brackets first. This is not rocket science. It is just a staircase of percentages. When you understand that it is layered, you see that earning more money does not suddenly punish all of your income. Now let's look at the 2025 tax brackets in a way that is very easy to see. On screen, let's bring up a grid. Down the left side, you see the tax rates: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Across the top, you see three columns: single, married filing jointly, and head of household. Each box in the grid shows the taxable income range where that rate applies for that filing status. Let me walk you through the first couple of rows so you see how to read this. In the 10% row for 2025, taxable income for single runs from $0 to $11,925. For married filing jointly, 10% runs from $0 to $23,850. For head of household, 10% runs from $0 to $17,000. Now look at the 12% row. For single, 12% runs from $11,925 up to $48,475. For married filing jointly, 12% runs from $23,850 to $96,950. For head of household, 12% runs from $17,000 to $64,850. I do not have to read every single cell. You can see the full chart on the screen. The pattern is the same for the 22%, 24%, 32%, 35%, and 37% rows. Each rate has a range for single, a range for married filing jointly, and a range for head of household. Here is the key point while you look at this chart. Only the lowest bracket pays just one bracket. Your taxable income starts in the 10% row, then moves into 12%, then 22%, and up as your income rises. If the top of your income is in the 24% row, only that top slice is taxed at 24%. The earlier slices are still taxed at 10, 12, and 22%. So if you say, I am in the 24% bracket, what that really means is, my last dollars of income are taxed at 24%. It does not mean that every dollar you made is taxed at 24%. This chart lets you see that very clearly. You can see the percentages on the left, the three filing statuses across the top, and the income ranges in each box. If you want to use this chart for planning, here are a couple of simple ideas. The key point to understand is that any deduction, by the nature of the system, comes off the highest tax and down from there. Suppose you have a taxable income of $175,000 and you come up with an additional deduction of $25,000. Now your taxable income is $150,000. You do not have to memorize the chart, you just need to know how to read it and how to think with it. That is what we are showing you here. If you would like this exact three-column 2025 tax bracket chart as a one-page PDF with single, married filing jointly, and head of household shown just like you see it on the screen, use the link in the description to download it. You can print it, keep it by your desk, or share it with staff or clients. Many people do their taxes at effect. They do them after the fact. The year is over. They do their bookkeeping and accounting and use these to fill out a tax form. There are some things that can be done after the fact. A sharp accountant may also ask you questions that result in your reporting expenses that you had forgotten about. Successful people do their taxes at cause. They plan out deductions and take actions before the year is over. This is called strategic tax planning. If you are a business owner, you can decrease your taxable income by spending additional money on certain deductible expenses. Buying a new computer, paying for a marketing campaign, or getting new furniture for your office can lower your profit and thus your taxable income. A large charitable donation may save you substantial tax, or it may not change anything. This is because charitable donations only help when you itemize your deduction. If your standard deduction is way over your itemized deduction, it is possible that a $10,000 charitable donation will not change your taxes one bit. There are a lot more ways you can lower your taxable income and thus your taxes. Also, some taxpayers qualify for credits, where money is simply taken off your tax bill or refunded to you. This is pretty complicated. For this reason, we do offer a free consultation. If you would like our assistance on tax-saving strategies, contact us at 877-758-7797 or info@torchlighttax.com. You are also welcome to visit the Torchlight Tax website and YouTube channel, where there are 400 articles and videos on tax savings and asset protection strategies. If you would like to save tax dollars or protect your assets, contact Torchlight Tax for a free consultation at 877-758-7797 or info@torchlighttax.com. More often than not, we can save you more money on your taxes than the fee we charge. If you found this video helpful, please like it, share it, or subscribe to our YouTube channel. Thanks for watching.